What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only NIO stock and what you should be looking out for tomorrow. I'm going to break down why on earth tomorrow is going to be a huge day for NIO from a technical standpoint. I'm going to talk about why on earth that is, and also what earnings are showing through the window. Are we seeing really good earnings? IBM just reported their earnings. They did pretty well, actually. I'm going to kind of show you guys what you should be prepared for earnings. I'm also going to break down what's going on with Max Payne for NIO, how this may affect the share price, and also what NIO put on their Twitter page, which is very good for the future. Now, before I say anything about NIO's Twitter, before I talk about what's going on with the future, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 6 free stocks, each worth up to $3,500. And you could always sell these 6 free stocks for cash and use that cash to buy some NIO shares for free in this limited time offer that ends in just 5 days. So please check it out before they run out. With that out of the way, let's get on with the video. So yesterday when I was drawing out the chart, I kind of drew out this wedge that looks like this. You could actually redraw this and make it look like this. I mean, it doesn't really matter that much. But either way, I want to talk about why tomorrow is going to be a very big day. Because when I initially had my wedge looking like this, because this is the price action that NIO was respecting for the past week. And maybe you could argue it's not perfect, but there is something very important about it that makes this very significant. And that is the fact that many people may argue that this was a trap right here. And I want to draw this a little bit differently in a very unconventional way to kind of express this point. All right, let me show you something. Why is tomorrow going to be an important day? Well, if you look at NIO's pattern, all right, NIO did this. We were up here at 24 bucks. We dropped down like this, push up in the middle, drop down, push up out of this like wedge, right? We drop down here. We jump to the middle, we drop down, then we push out of this wedge. So the question is, are we going to break down and drop even lower tomorrow or within the next 2 days? Or is NIO about to push up and actually fill this gap? And I do believe tomorrow is going to be the day we find out the trajectory. Because when you trade in the markets, you're going to notice that the market tends to have these patterns, and this could be kind of like a breakout we might be seeing from this like wedge, at least temporarily, because what's happening is we kind of broke out of it like this. We dropped down to test it, and typically when you test it, you could get a bounce all the way up here if NIO is going to be bullish depending on earnings. So we could get a move like this. If earnings are really, really good, NIO could push like that. But if earnings are not the best, if NIO does kind of drop with the overall market, then we could drop right back into here, kind of test this like this. Wait, hold on. Let me use my polyline. Drop down like this, retest this, and kind of maybe break down from there, fill the gap down there, and continue like that. So tomorrow is going to be the day that really determines this, in my opinion. You guys can see the two main possibilities. And I do think it's going to be kind of dictated by earnings. Now, what do I think is the most likely possibility? In my honest opinion, I think it's most likely going to lead to some downside. And I really hate to say this, but it's my honest opinion. I can't guarantee that, though. I just think that we might see a little downside tomorrow because of what is coming out. So what's going on right now, okay? The market's doing all right. We have a lot of earnings now coming out, and we just had IBM report their earnings. Tomorrow for Tuesday, though, I believe it's going to show it somewhere here. We have Netflix. I think that's going to be a very important one. That's one of the most significant ones outside of like Ally Bank. Should be other ones. I may have missed them, but I think Netflix is going to be one of the most important ones. So far, IBM has their earnings. It just came out like not that long ago, and they beat all expectations. They beat lots of expectations from Goldman Sachs and Wall Street, and I'm very proud of them for that. You can see right here, earnings per share $2.31 versus the expectation of $2.27. The revenue was at 15.54 billion versus 15.18 billion expected. So they did well. We got 9% of an increase in their revenue year over year over year in the quarter. They're doing pretty well from here, so it's a pretty good start. However, this is not guaranteed to continue, depending on many factors with what happened in China. And historically, during recessions, EPS is suggested to drop. So be prepared for that. Now, why is tomorrow more likely to see maybe some red for the market? It's a little bit more red than green. That's because Netflix has their earnings, and Morgan Stanley is warning of a streaming recession. Now, I don't like to be pessimistic. I mean, it could be pretty decent, but right now the data is not looking that good. Their revenue is expected to be around 8.05 billion, which is pretty not necessarily bad. Earnings per share should be at like they're showing about $2.99. Once again, not necessarily bad, but subscriptions, they're expecting a loss of over 2 million users. That's pretty massive. And what essentially happened to this company was during the pandemic situation, a lot of people were staying home. I think Netflix gained a lot of views and subscribers. And what happened was during Q1, Netflix did see a big loss in their users as we were really opening up this year. And another thing about that is when Q1 came, a lot of people actually started to kind of transition back to work. Now, we did have some more lockdowns due to the Omicron and things like that. So obviously the loss wasn't as bad. And as we approach Q2, which is what this earnings is for, I think the Omicron, the variant of the virus, that really kind of like spread away. It kind of eased down. And now the virus isn't as imminent as before. So a lot of people are going back to work. Netflix is losing millions of subscribers possibly. This could lead to some red for Netflix and also for the market. If I actually pull up Netflix chart, you can see Netflix is still pretty down compared to where it was, back around, what was this, like April? We saw this giant gap down. Couldn't Netflix start to fill this gap? I mean, if they surprise earnings, if they do well, maybe they in the future they could. But as of right now, I'm not really seeing that. It's looking more like they may see another, drop down here. They may start testing that 164 level, maybe even lower than that if things are very bad. And earnings seem to be more likely to be not the best. Now, has the market already priced this in? We do have a very forward-looking market, so maybe they have priced in most of this, so they won't be that bad. I mean, we basically dropped from 333 all the way down to about 162. We got cut in half. I don't think we're going to get cut in half again, but we could see some red because of this. And Netflix is a massive company. It's worth hundreds of billions. So they could actually have a negative effect on the market. So I just want to put that out there. Could have a negative effect on NIO and how the market performs. But there are two main perspectives of looking at this. Obviously, you have the wedge that could be kind of adjusted. Either way, even if the wedge kind of looks like this, if I readjust it, it still looks like we might have some downside here either way. And once again, a different interpretation from what I drew yesterday was kind of looking at it like this. If we are set for a breakout, you could interpret it that way and see this gap fill if the market does rally. But I just think that's very unlikely from this point. It looks more like we're going to see a continuation to the downside, and we're more likely to see this thing continue down from here. So where do I see NIO going? In my personal opinion, I do think that $19 is going to be a key zone for NIO. We were testing 20 for quite a bit of time, and we actually held above it so far. But typically Mondays or Tuesdays tend to be better days, and the later days of the week tend to be not as good. And it's barely the first day, and NIO's barely up only like 0.58%. Hopefully tomorrow we could see some decent price action. I do anticipate a slight red day like this. So that's essentially what I'm predicting. We're going to test 20 many times. We have a gap down here at 19.2. So I do think NIO is going to fill that gap soon. That's my honest opinion. I do think NIO is going to test the 19 level. As far as max pain goes, max pain for the week is at 19. Once again, I am a little bit bearish. I hate to say that. And with that said, I want you to be very careful with how you play this if you are trading. Implied volatility is up because of earnings. And for NIO and other stocks out there, I think there could be some choppy price action. So I am anticipating some downside. I still want to end this video by letting you know that I have not lost faith in this company. I'm still very bullish for the long-term future. If you look at what NIO put on their Twitter page, NIO Global, they stated that from childcare center to conference rooms and forums, the history of NIO House leading up to today goes far beyond just a showroom to a home that provides a premium NIO lifestyle, which allows our users to relax, recharge, innovate, and more. So That's part, in my opinion, of what really brings in bullish price action for a company. They are improving lifestyles, they're really building a brand, they're really improving the lives of their people, and they're going to continue to grow as years go on when it comes to deliveries, AI technology, their chargers, battery swapping technology, the stations, and so on and so forth. So, short term, maybe the market's bearish. I understand that. Maybe things are not looking the best. Maybe that's the case. The long term, we're most likely going to see insane moves to the upside. I do believe NIO is going to break hundreds of dollars a share within the next few years. I'm still very bullish. So I wanted to show you both a bullish and bearish possibility because sometimes the market could surprise you if earnings just surprise us. NIO could push up and fill this gap, but I just think it's a little bit more probable that NIO pushes down and starts testing that $20 range again. It may actually hold 20 temporarily, but we do look like we're set to fill the gap down here in that low 19 level as Max Pain is at 19, and this is what the chart is showing us. Now, I haven't lost faith. The long term is still very bright and bullish. The short term just looks like this, and we're most likely going to see a move like this, in my opinion. With that out of the way, thank you for listening. Please have an absolutely fantastic rest of the day, and I'll see you guys in the next one. NIO to the moon, and peace out.